Good evening to all of you. I am Saravana Kumar, Chief Investment Officer, LIC Mutual Fund. Now I am going to discuss about the today's union budget development and what's impact on various sectors, and our take on the economy. I'll be discussing for next few minutes. I had given some three questions. The first question is, what's your advice to the investors now on that budget has been unveiled? And overall, this budget is positive for Indian markets. If yes, why? If you look at the union budget, it's a progressive budget, and the budget theme is more on reforms orientation as well as kickstarting the economy. If you look at the fiscal deficit for FY 16-17 was 3.5%. This time FY 17-18, the finance minister brought it from 3.5 to 3.2. Next financial year, that is 2018-19, he'll bring it to 3%. So fiscal deficit is under control, but same time the finance minister is focusing more towards kickstarting the economy, mainly in the rural segment. So the focus was more for the rural. And if you look at the farmer's income from current level, another next 5 years time, he planned to make it double. Even though if you look at the rural credit, farm credit, 10 lakh crores was allocated in this union budget. So the rural consumption is going to pick up. If the rural consumption really picks up, then it is going to accelerate various sectors within the Indian capital market, mainly the consumption sectors, even the cement, even FMCG, even later capital goods, everything will pick up. Even for the demand for the agri-input sector also, it's likely going to move up. So his theme is more towards consumption for the rural economy, kickstarting the rural economy. And coming to the market, mainly the Indian capital market, if you look at, market was anticipating long-term capital gain tax may be introduced this time, but that was not introduced. That's a big positive for the Indian capital market. And second thing is, market was expecting the short-term capital gain tax percentage may be increased. So that also was not done. So that's a big push for the capital market point of view. And third point is, he is pushing more for the infrastructure push. If you look at, he announced this time, this time the railway budget also combined with the union main budget. So this time he has allocated near about 3.9 lakh crores for the infrastructure spending. Out of 3.9 lakh crores for the FY 17-18, near about 1.3 lakh crores is allocated for the railway budget. So that is a big positive for the infra spending. And if you look at the infra spending, whenever you spend good money, even 1 rupee spent for infrastructure, that the multiplier effect will happen for 4 rupees for the economy point of view. There's a demand for labor, demand for capital goods as well as cement, steel and everything. So that is also going to add the multiplication factor for the economy to grow further. So infrastructures, there is a positive development, we are seeing it here. Like that, another sector, if you look at, for India, for the job employment point of view, there is a medium, small SME sector. That SME sector is basically providing near about 90% of India's employment. That sector also, he has given some good benefit. The medium SME sector, which has a turnover of below 50 crores, he has reduced the income tax, he reduced the corporate tax from 30% to 25%. So that is a big push for this particular sector, and this sector is likely to do well. And fourthly, if you look at the personal income tax also, he has brought it down. If you look at the personal income tax, earlier used to be minimum slab used to be 10 for 2.5 lakh to 5 lakh kind of a income tax bracket. The personal income tax used to be 10%. He brought it to 5%. That means more money will be lying with the consumer's hand that they'll be spending for the consumption. So that consumption could be even the FMCG product, or even the non-discretionary product, or it could be two-wheeler, or maybe it could be a passenger vehicle, or it could be even for a housing. So these are the beneficial. He is even given to the end customers, and even he has focused more towards affordable housing also. Affordable housing, if you look at the urban, 30 square meters, as well as for the rural 60 square meters for the super built-up area, that he brought it to a corporate area. Plus affordable housing also he has brought it to under the infrastructure financing. That means the leading infrastructure financing companies, as well as even the other infrastructure financing companies, will start lending more towards the affordable housing. So we are expecting affordable housing is going to pick up. Plus, even if you look at the Prime Minister's motto near about 2 years back, what he declared is year 2022, he is announced kind of a housing for all. So the affordable housing segment also going to boost majorly in this particular budget. Affordable housing, if you look at the housing sector, constitutes near about 40% of 40 to 60% of cement sector's requirement. That sector also likely to do well going forward. So overall, if you look at, the market is very positive because of all these announcements. So the sector is going to, it's going to kickstart many sectors across the various vertical. That's what we are going to see for year 2017 and 18. And coming to the question number 2, what are the sectors you are currently bullish and bearish on? So today's budget is very positive for the market, various vertical within the market, and we are bullish on some few sectors. One sector could be what I said is affordable housing. The housing sector is going to do well, and plus this housing sector also, the point whatever discussed earlier, even the Real Estate Regulation Act is coming to implemented sooner. Already it is passed in the parliament, and end of the day, the real estate is under the state government subject. So various state government also trying to pass the law in the respective assembly. So that the bill is getting passed in the various state assembly also is going to be beneficial for the real estate sector. So the real estate sector, we are expecting it may do well going forward, because of all the whatever the measures they're given in the budget. And third is, if you look at the commercial real estate also, mainly the commercial real estate, and we are talking mainly about the areas like Pune, say Bangalore or Chennai, and other Kolkata and other locations, that we are expecting there's going to be a recovery on the commercial real estate. The commercial real estate, we are seeing there's a demand is picking it up. So overall, we are seeing the real estate sector is likely to do well, except the premium housing or maybe the luxury housing. Other sectors, other vertical within the housing sector is likely to do well going forward. And second sector where we are positive is your commodity sector, mainly the non-ferrous sector. Now, commodity sector, if you look at last calendar year 2016, it has given near about 35% kind of a return, 35 to 40% kind of a return. And within the commodity sector also, we are positive on non-ferrous segment. Non-ferrous segment, if you look at the zinc price from $1,600 per ton at LME market, it has moved up by more than 50%. Like that, if you look at aluminum also, around $1,500 per ton, it also moved up by more than 25%. And same case with the copper also. Copper also moved up by more than 25%. So going forward, because of the we are seeing the globally also that recovery is happening for the infra space and housing space. Same thing linked to the Indian market also. We are expecting non-ferrous segment, there is going to be demand going forward for next 1 year to 2 years. But same time, ferrous segment we are expecting may not do well because of the huge production of steel coming from the Chinese territory, China's country. So that is, since the government of India has imposed here MIP, minimum import price, so we are able to see some of the steel companies seeing the better bottom line, but that trend may not continue. But non-ferrous segment we are very positive, and other segment where we are positive is the oil and natural gas sector. Even if you look at today's union budget also, for LNG import, the import duty has reduced from 5% to 2.5%. Definitely that LNG import reduction by 50% is going to be beneficial for the city gas distribution company. So today, that's the reason we have seen city gas distribution company stock prices are moved up by more than 7-8%. And we are finding city gas distribution company also will do well going forward. And secondly, the finance minister discussed about consolidation of the oil marketing companies. So you want to make a conglomerate of a big OMC company and line with other global oil majors in the US like Aramco and others. So that is also going to be beneficial for the oil and gas sector going forward. And third is he announced 2 major strategic oil reserve in India. Currently, India has 3 strategic oil reserve. One is at Mangalore and then Udupi and Vizag. Now, adding to that, he has announced 2 more strategic oil reserve. One is at Orissa and second is at Rajasthan. So currently, India consumes near about 185 million tons per annum kind of a your crude requirement in India. Out of that, near about 8 to 9% of crude oil is going to will be held in the strategic oil reserve. That is also going to be beneficial for the oil and gas sector. So broadly, we are positive on oil and gas sector and non-ferrous commodities as well as even the real estate. And these are the sectors we are broadly positive. And then coming to the final question, PSU banks rallied today. What is your take? If you look at today's union budget, the net borrowing has reduced by near about 80,000 crores from 4.2 lakh crores, it brought it to around 3.4 lakh crores. So the net borrowing reduction of around 80,000 crores also going to be beneficial for the bond market. Today we have seen the bond market 10-year benchmark has rallied near about 4.5%. So the 4.5 basis point, that is also beneficial for the most of the bank treasury, mainly the bank treasury. Because if you look at the PSU banks, they have a huge book on the HTM as well as even the available for sale. So they'll have a good mark-to-market gain. And second thing is, whatever we are seeing today's measures by the finance minister going to kickstart the economy, we have seen the credit growth was almost tapered for last 40 years, kind of a low. We are going to see the credit growth may pick up. The credit growth really picks up, then it is going to be beneficial for the banking sector, which has more linking towards corporate lending kind of a focus. So corporate lending sectors, if you see for last 3 years, the price to book point of view also was anywhere between 0.5 to 1.5 kind of a price to book multiple. So since a credit slowdown happened and we have seen not much of credit offtake for both greenfield project as well as the brownfield project, we have not seen much of credit offtake was taking place in the system. So that was one of the reason the corporate banking institution, mainly the PSU banks, didn't get a proper price to book in the market. But since today's budget, as well as we are seeing the credit offtake is now we are seeing some recovery. So we are going to see the corporate banking linked sector will do well. So that means including the PSU banks sector also will do well. We are going to see the price to book expansion going forward. And second thing is, if you look at even the NPA provisioning also, there is a benefit is given in today's budget. So that is also going to clean up some extent banks NPA. So overall, it is positive for the banks, mainly the PSU banks, as well as corporate lending oriented bank. So these are the broader, discussion points what we thought of discussing regarding the capital market. And now I'm concluding my comments. Thank you.